If you clicked on this video, I assume you're trying to expand your Amazon business. And if so, you may be wondering, how can I access working capital to help grow my business? So here are 3 financing options that we're talking about in this video. Also, make sure to stick around until the end because I want to talk about this bonus strategy that all sellers can take advantage of. Okay, so the first way to finance your business is with an SBA microloan. And basically, these are just smaller scale loans funded by the Small Business Administration. They're actually one of the only affordable small business loans that specifically target startups, although both new and existing businesses can borrow up to $50,000. The repayment terms are generally between 1 to 6 years, and the interest rates are between 6 and 9%. Now, at the time of this recording, these are the most recent rates, but just know that the rates you pay will depend on the program you choose, the amount you borrow, and the term length. So, with the capital you receive from a microloan, it can be used to help purchase more inventory, new office supplies, or really any other business expenses you have. Now, the only thing you can't use this for is to pay off any existing debts or to purchase any real estate. So, who's eligible for a microloan? Well, these do vary by lender, but for the most part, you'll need to be a for-profit business. You shouldn't have any bankruptcies or foreclosures in the last 1 to 2 years. You'll also need to demonstrate the ability to repay the loan. And generally, this is done by submitting a business plan that proves your current cash flow will be enough to pay back the loan amount. Now, don't worry, if you're a brand new business or you just don't have any revenue to share yet, you can usually submit what's called a financial projection, which basically just shows the lender what products you're going to sell and how you think you'll be able to repay the loan back. And lastly, generally, lenders will require some type of collateral that protects them in the event that you're not able to pay them back. And there's 2 different types of collaterals to know about. These can be business assets like any equipment you own, inventory, or even real estate. Or these can be your prized personal assets like your car, house, or even that PS5 you somehow managed to get. Lenny? Huh? Talking to you. Now, what are some of the pros and cons to these microloans? Well, first, both startups and established sellers are eligible for up to $50,000 in funding. It can be used for inventory, supplies, equipment, or even just general working capital. Also, typically, lenders don't require you to meet a minimum personal credit score, which is especially great if you don't have any credit history at all, or even if you're new to the country. Next, microloans have low fees, competitive interest rates, and long repayment terms. Now, as for the negatives, by definition, these are smaller dollar business loans. So if you need more than $50,000 to help grow your business, you may need to look elsewhere. In fact, at the time of this recording, the average microloan is only about $13,000. Next, like I mentioned earlier, you won't be able to use these funds to pay off any existing debt or to purchase real estate. You'll also have to provide a written business plan, your business license, any permits you have, and a collateral. And because all these things take time to submit, the application process may take a few weeks or even a few months to complete. So with all of that in mind, who is an SBA microloan best for? Here's what I'd say. A microloan is a really great option if you're a small or even a brand new business. It's also great if you have limited credit or even if you just have lower than average credit. Also, if you don't qualify for a traditional bank loan, these microloans are fantastic. Because although you aren't able to access a whole lot of capital, you'll still at least be able to get going and start investing into your business, which will hopefully get things moving in the right direction much faster. So if you're looking to apply for a microloan, the first step is to find an intermediary near you. To do this, I put a link in the comment section of this video, which will then bring you to the SBA website. And here you can use this awesome tool to help you find lenders in your state. After you reach out, your lender will walk you through the remaining process and inform you on what all needs to be submitted. You can usually expect this entire process to take at least a few weeks, and that's just to submit all of your information. So if you'd rather go through a process that is much faster and way less complicated, I think you're really gonna like this next funding option, and that's Amazon Lending. Here's what you need to know. Amazon Lending is an invite-only program offered directly by Amazon to help grow your business. Now, they don't disclose the exact details, but a lot of sellers who have already used this program report being able to borrow up to $750,000. It's also reported that the repayment terms are between 3 months all the way up to 2 years, and the fixed interest rates range anywhere from 3 to 18%. Now again, Amazon doesn't disclose this information anywhere online. These are just the ranges that some sellers have reported. However, I've personally used this program myself, and actually I'm currently using it right now. I also have no problem sharing my experience with you. So to help you better understand what to expect, I'm going to show you some real screenshots from my account. Now first, what you need to understand is that Amazon Lending is a program that has 4 different financing tools inside of it. And these are all different, so let me summarize the main differences. The first one is called a term loan. Now this is the most common one that a lot of sellers take advantage of, and it's the one I'm currently using right now. Essentially how it works is Amazon will credit your account with a one-time payment for your whole loan amount. And then after a month passes, you have to start paying it back each month in equal payments plus the interest. So to help make this crystal clear, here's a screenshot of the exact loan offer I accepted. As you can see, I was given a total of $7,000, and I'll have to pay it all back over a 6-month period at an interest rate of 14%. So how the math works out is I'll have 6 equal payments of just over $1,200, and that includes the $288 I'm paying in interest over 6 months. Also, keep in mind that Amazon automatically takes your monthly payment from your account balance in Seller Central. So as long as you're selling enough to cover that cost, you won't have to pay this amount from your actual bank account. Now, maybe this is just me, but personally, paying $288 for a $7,000 loan is a great deal. Yes, it could have been a lower interest rate, and yes, it could have been a higher loan amount, but keep in mind that this particular selling account has only been active for 6 months, and it's also the very first loan that Amazon has offered me. I've heard so many countless stories of this typically being the case, and once you pay back your first loan, Amazon will begin offering you higher loan amounts, longer repayment terms, and lower interest rates. Okay, so the second way to use Amazon Lending is with an interest-only loan. This is different from the term loan because just like the name suggests, you'll be giving a fixed period of time where you only need to pay the monthly interest and not the principal. And then after that fixed period is over, you'll begin paying both the principal and the interest. So for example, let's go back to my loan offer that I showed earlier. As you can see, each month I'm being charged both interest and the principal. And the principal ranges from $1,100 the first month to $1,200 the last month. Now, let's say instead you're using an interest-only loan and you're given 3 months where you only have to pay off the interest, not the principal. So if you're using the exact same terms here, you'll notice that while you do have this 3-month buffer zone of not paying off the principal, as soon as month 4 begins, your first payment will be almost $2,200 and your last payment will be just over $2,500. That's a pretty big jump from paying just around $1,100 each month like you would with the term loan. Now, there is a big benefit of this type of loan, and that's if you really need more time to begin paying off the principal. Because remember, with the term loan, after a month of receiving your funds, you have to begin paying off both the interest and the principal. So if you're using a loan to pay for additional inventory, you know that it may actually take at least a few months for that inventory to arrive into Amazon's fulfillment centers. Also, just keep in mind, I only use 3 months as an example here, but Amazon does give out loans with longer interest-only periods. It really just depends on the type of offer you receive. So if you need the extra time and you're confident you can afford a higher monthly payment, then I think an interest-only loan is a great way to fund your additional inventory. Okay, now the third way to use Amazon Lending is with a business line of credit. And this one's pretty straightforward. Basically, you can think of this just like a credit card. Once approved, you will have access to a revolving credit line, which you can draw at any time whenever you need it. Now, of course, you'll have a maximum amount that you can draw from, but what's really great is you only pay interest on the amount that you take out. Also, your interest rate will be fixed and you don't have to worry about it going up because your interest rate is locked for the life of your credit line agreement. Okay, now the fourth way to use Amazon Lending is with a merchant cash advance. This one is actually brand new and Amazon just rolled it out a few weeks ago. And honestly, I think a lot of sellers are going to start using it. So here's how it works. When you receive a cash advance, instead of having the pressure to pay back a certain amount each month, Amazon will simply take a fixed percentage of your monthly sales until it's fully paid off. They call it a fixed capital fee, and it's automatically drawn from your account. And this is awesome because say you have a really slow month, you don't need to worry about paying off a minimum payment or even late fees. In fact, even if you have a month with 0 sales, Amazon still won't take anything from you until you begin making sales again. Also, there's no interest, so this honestly is a really exciting program that just rolled out, and so far I think it's a no-brainer. Now, of course, you want to make sure to carefully consider whether or not you're okay with Amazon taking a percentage of your sales versus a fixed interest rate, which may or may not be the cheaper option in the long run. So just make sure to consider all of your options before you just accept one of these offers. However, you probably don't need to worry about it right now, just because Amazon said they're still rolling this program out, and it should become more available to sellers in 2023. But don't worry too much because this whole concept is actually not really new. It's just new to Amazon. In fact, there's a whole industry out there called Fintech that does the exact same thing of taking a percentage of your sales rather than a fixed monthly payment. And if you remember, we have this little whiteboard here now that says Fintech in the 3rd column. So that means we're going to talk more about it here shortly. But first, I'm sure you're wondering now, who's eligible for Amazon lending? Well, the same exact answer applies to all 4 financing options, and unfortunately, Amazon doesn't have a list of requirements anywhere online, but what we do know is that you must have a proven track record of growing your sales, and your seller account must be in good standing with a high level of customer satisfaction. So in other words, you likely won't receive an offer if you have poor customer service metrics or really any major policy violations. So these are both pretty straightforward, and really the first one is just Amazon's way of feeling confident in your ability to pay back the loan. Now, from my personal experience, as I said earlier, I was offered a term loan within the first 6 months of selling on a brand new account. And previously, I've heard a lot of sellers say things like, you need to be selling on Amazon for at least a year, or you need to be doing at least $20,000 a month to even be considered. But in terms of my experience, that just wasn't the case. In fact, here's a screenshot of my sales during those first 6 months before I received the offer. I started out at $8,000 and then peaked at around $18,000 for a total of $75,000. It was at this point that Amazon then offered me the term loan. So although you do need to build up a proven track record of sales, in some cases, it may not take too long to receive your first initial offer. Now, how will you know if you received an offer? Well, if you're eligible, there are a few ways you'll get notified. First, you should receive an email just like this one inviting you into the program, and then here you can actually accept or deny it. And then the second way is there's usually a widget on your Seller Central dashboard allowing you to either accept or deny it there. Okay, now let's get into the pros and cons to Amazon lending. The first pro is that there's no credit checks required, and instead they'll be looking at your sales history to determine your eligibility. Next, interest rates are actually pretty low, and you can qualify for pretty large loan amounts. Also, this one's pretty big. On average, it takes 5 days for approval, but some sellers stated they've received a decision within minutes and their funds dispersed on the same day. In fact, this was my experience too. I was actually accepted into the program immediately, and then within 2 days, that whole $7,000 loan amount was just deposited into my bank account. And that's big because you can start using that cash right away. All right, now the fourth benefit is that there are no origination fees, no application fees, and no prepayment penalties. It's all pretty straightforward and low cost. But now for the negatives. It is an invite-only program for eligible sellers only, so if you're a new seller, you'll need to build up your sales before receiving an offer. Also, the big one here is that unless you're doing a cash advance, your monthly payments are still taken out of your account balance. So even if sales are slow 1 month, your payment is still required. This means that if you don't have enough sales, you may have to actually pay a late fee or increased interest. Lastly, these are mostly short-term loans, which means the monthly payments will be higher than a long-term loan. So with all of this in mind, who is Amazon lending best for? Amazon lending is great if your business is growing and you have consistent sales, but only take the money if you really need it to increase your inventory, and just make sure that that inventory is fast moving so that you'll be able to pay back your loan on time. Now again, you can't exactly apply for Amazon lending. You'll need to be invited first. So just make sure to check your emails, your Seller Central account dashboard, and then sometimes you can actually use this link to see whether or not you're eligible. Just click See Details, and then on this next page, click Learn More, and yes, I'm interested. Now you can find this link in the pinned comment section below, and also in that comment, we're gonna put some really helpful resources for you, including a link to sign up for a Jungle Scout subscription. So make sure you check out that pinned comment down below. Okay, now let's move on to the third way to fund your Amazon business, and that's using fintech lenders. So what are fintech lenders? Well, fintech or financial technology is just like Amazon's merchant cash advance program, where instead of having to pay back a minimum amount each month, these lenders will take funds from your Amazon sales. So if your business doesn't make any sales one month, you're not on the hook for owing them anything during that month, except they don't actually issue loans. So instead, if your business is eligible, you could access over $1 million in inventory funding. And as for the time to repay it back, again, because they're only taking a percentage of your Amazon sales, there's no time requirement to pay it back. Also, there are typically no fees or interest, but it all just depends on which companies you reach out to. So speaking of, which are some of the best fintech companies to reach out to? Well, I can't personally vouch for anyone in particular, but we did create a list here of some of the most notable lenders with the highest rated reviews online. Okay, so who's eligible for fintech lending? Well, because each company has slightly different requirements, let me just show you an example of one company in particular, and hopefully you'll start to see the types of things they're looking for. And for this example, I'm gonna show you a company called 8Fig. And just a little side note here, this isn't sponsored at all. But I do actually know a few sellers who are currently using them, and they've only really said nice things about them, so I feel confident using them as our example here. Okay, so on the requirements section of their website, they have this line here that says they're looking for Amazon businesses with at least 6 months of revenue exceeding $100,000 in the last year, or monthly revenue exceeding $8,000 in the last 3 months. And although each company does have different requirements, from what I've looked at so far, these numbers actually seem pretty standard with the rest of the industry. So that's just a little bit of what you can expect. Now let's get into the pros and cons to fintech lending. The first pro is that there are no mandatory monthly payments because, again, these are not traditional loans like a bank would give out. Next, you don't lose ownership of your business, which is huge. You just temporarily share your profits with them. As well, there's no interest or any credit checks required. Now, as for the negatives, you will have to hit a certain sales number to even be considered, just like the example I showed earlier. As well, you typically will need to have a registered business or an LLC attached to your company. You might also find that some of these lenders only work with profitable private label businesses and not any other type of business model like wholesale, for example. And lastly, say you have a really big month, you may actually end up paying more than you would with a traditional bank loan that's capped at a minimum monthly payment. So with all of these funding options in mind, which one is right for your business? So with non-traditional lenders like Amazon Lending and Fintech, for example, they're more likely to understand the unique needs of your business. And unlike a more traditional bank, your eligibility is based on your sales performance and account health, rather than your credit score. When it comes to the advantages of non-traditional lending, you'll receive your funds much faster. They offer more financing options with flexible terms that just aren't available from most banks. You're also not required to have a physical brick and mortar location. And typically, these types of lenders are designed specifically for e-commerce businesses and in particular, Amazon businesses. Now, real quick, what if you're a brand new seller or you just don't qualify for a loan yet? This is where this bonus strategy comes in. If you don't have a lot of money to grow your business now, it may not be a good idea to jump right into borrowing money. And honestly, we've seen a lot of sellers create additional cash flow by bootstrapping a secondary Amazon business and then reinvesting all those profits into their main business. So whether that's starting a wholesale business, getting into online arbitrage, or even doing Amazon KDP, there's tons of other options out there to help fund your Amazon business. Then, as your overall business grows and requires more capital, you can then start looking at outside funding. And we actually made an entire video ranking every single business model there is on Amazon. So make sure you check out this next video to learn everything you need to know about each one. Thank you so much for watching this video, and I'll see you in the next one. But from what we do know, also, keep in mind that Amazon automatically deducts. Wow. Okay.